Hi, my name is Berlin, and within this video, I would like to talk about a crypto analysis which is based on recent data. So we are looking into price action of the meme coin Dogwifhat. And within this video, I would like to particularly focus on how we can utilize trading strategies such as market structure, measuring the strength of the trend, and further indicators allowing us to capitalize on certain trades. So without any further ado, let's delve into the analysis. So I guess no one needs to be an expert here to see that this is a clearly downtrending market. And I have done some pre-work already, marking out this swing low and this swing high. Now, after this swing low and swing high has been created, you'll see that there was some kind of choppy price action or a consolidation. There are so many different terminologies, but basically this is just telling us the price is ranging between about 1.82 up to 2.08 or something, right? So no major price action we need to talk about. Now, if I look into a price action like this, I am trying to understand what buyers and sellers are actually doing. And in order to do so, there's a tool which is called the Fibonacci tool. This Fibonacci tool is divided into different areas. The 1 stands for 100%, 0 for 0, and these numbers in between are somewhat reflecting the retracement of a swing low and swing high. So for instance, if I take this tool here and drop this down, I can basically measure when the bulls were interested to enter into this particular price action. So with marking out the swing low and swing high, there's a wick. You see that buyers were interested in to enter into this particular price level at a pullback of 78%, which does mean bulls are not very strong, which is also logically because, as you notice, we had a strong pullback already, so buyers would hesitate to, let's say, buy at a 0.3 or a 30% retracement. Doesn't make any sense. Who would like to buy from here, right? Doesn't if we had such a strong pullback in the past. So we had this pullback. This resulted into some sort of initial price action to the upside, but there was no high being created. With no high being created, I mean this recent swing high has not been topped out by this one. And again, we see another pullback down to almost this liquidity area. So what I will do now is simply draw this horizontal line, which is just marking out this swing low. So S low stands for swing low, and just put it in here. S high for swing high. All right. So you'll also see now that the price did not really get below this price level here, which is after about a week or so a signal for buyers that maybe sellers have been exhausted and new price levels can be accomplished. And after this internal structural break, so this high has been defeated, we had a retracement. This low is obviously lower than this one, which then means I can just start to draw this. We have this type of price action now, heading towards the swing high, right? Now, you can see here that this low has been respected. Buyers stepped in at a very cheap price because this retracement was actually pretty strong. However, buyers were defending this price level, making this one a strong low. Then we had another run to the upside, creating a so-called breakoff structure. So what I basically mean with it is it has created a new high, internal high, right? Because this high is not higher than this high. And after a short period of exhaustion, we had another run to the upside towards this swing high. Now, as I said in the beginning, whenever we look into market analysis, we want to understand both sides, the buyers and the sellers. And we can clearly see that sellers were not been able to push price lower for about a week or so, or even longer. So this provides us now a good opportunity to enter for a long trade, right? So maybe after this pullback, we could have entered targeting the swing high. But unfortunately, this is not the case. We're currently still observing and just looking what's happening next. Also, it's maybe worthwhile to mention that if we again draw this Fibonacci level, that sellers have not rejected the price level at a let's say 78% retracement level. So this also means sellers are somewhat currently sleeping or not available. So let's see what's happening next. Okay. This candle here is actually quite interesting because you'll notice that the price has opened here, was pushing down and then pushing up. The next candle hasn't even reached anymore this price level here. And then in another 4 hours, again, buyers were not able to push price higher. So there's actually now a strong likelihood that prices go lower. I mean, there's also some technical analysis around candlesticks. This is called a doji or whatever, but I don't think it's important to remember all those candlesticks pattern. It's more important you understand what this actually means. And this basically means is buyers were not able to push price higher for the last 12 hours. Instead, you notice that sellers are becoming more and more aggressive, indicating a trend continuation. Now, what we now noticed is that this swing high has been defended by the sellers so far, and we can also now mark this low out. This low has now become a weak low because this low was not able to create a new high. So at this price level here, were not sufficient buyers pushing prices higher. So there's a very high likelihood that we actually come down to this price level or even lower. So basically, this swing low has created this swing high. And now if you think about being an investor, right? So me and you, we want to invest, we want to make money, and we want to enter at really good prices because otherwise we're going to lose our hard-earned money, right? So if we take this, where would you like to enter? If I also take now my long position here and I drop down maybe to this one, and I want to target a 1 to 2 risk reward ratio. Does this seem to be for you reasonable, this type of price target? I don't think so. So I guess if we get to this price level, there might be some sort of price action, which would also allow us then to reduce our stop loss to this level, and we could then maybe target this high or this high, which then results to a better risk to reward ratio. But we can also get this type of price action. So we get down, up, down, and then we would have been wiped out, right? So in order to anticipate that, we would need to really go down to here to make sure we don't lose our money. And this is not a favorable price level. So for me, this is not very interesting, but market will tell us later what's going to happen, right? Okay. Let's see what's happening here. So this low has created this high, But you will notice here that this 4-hour candle has not closed above this high here. So making this again a weak low. So I guess we're gonna trade lower. Yep. Oh, yes, we did. So what we notice here now is that this price level has been disregarded, has been disrespected. So actually, given this type of price action, we may even reconsider if we want to buy at any of these price levels, but market will tell. Okay. Okay. So no real price action here, and we can now drop this. See that this actually has been so-called displaced. What do I mean with displaced? Well, this simply means this swing low has been now has not been rejected by buyers, and sellers were able to push prices even lower. So what I then typically do is I wait for retest of that level. So that's also why I've drawn this yellow box here to the left. And if price is being rejected like so, this typically results in a further sell-off. All right. Now, you notice that I have already done some pre-work for you by marking out these price levels, because what I typically like to do is to focus on most recent price actions, allowing us to understand what has happened recently. So we're currently on the 13th of January, so showing you some price data from, let's say, 500 years ago is, from my point of view, not really interesting. Now, I want to go to the left, to the right, sorry, and show you what has actually happened here. I've literally just drawn this price action here. So if you this in here, you'll notice this is the exact price action that has happened. You can see here, this is the swing low, this is the swing high. You can see here that this swing high is higher than this one, which is again aligning with a higher time frame, making this particular low actually weaker, but we still need to wait for price action. And after such a strong sell-off that we saw here, right, we could then, for instance, enter here and target a 2-to-1 risk-reward ratio, just like that. Because we wait for a retest of this price level. The reason why you can mark now this price level is quite easy. Buyers had time for about 2 weeks to test whether this price level is interesting for them, right? And if this price level gets displaced with such strong pace, this means there's a very low likelihood we're gonna actually see this price level lasting for a long time. So if price gets into this level, right, you can place your stop loss, you can place your limit order here, leave some space, and target a realistic 1-to-2, 1-to-3 risk to reward ratio. So if we put this over here and say we want to enter the market right here, normally you would actually leave some space above, but as I said, given that this price level has been traded for such a long time, seeing this price level in immediate time is very, very unlikely. So we can actually then have a look to the left and see where the next liquidity levels are, and you can then take a look to the left and notice, okay, this price level here has been disregarded, so this price level here is the next one. And this is then how you could have entered the trade, resulting into a 13% down move. So yeah, I mean, it has been a long video. Apologize. This is my very first video. I'm trying to do my best to either short it or being more specific at particular scenes. And yeah, let me know if you want to have any further analysis. I'm happy to cover more of these. You'll also notice that I was maybe using some terminologies that you were not used to or that were new to you. I'm always happy to provide you feedback on certain things. And yeah, let me know how you find it. Peace out.